Hello, folks. This is Drew Rathgeber here with your weekly update with Steve and I. I am the owner of ProFuturesTrader.com, and Steve is the author, creator of Wage Trade, an advisory service that he runs over here at ProFuturesTrader.com. But this is real quick, just an overview. This is not specific trade recommendation whatsoever. If you need specific trade recommendations, please reach out to us directly. We'd be more than happy to help you. The reason for that is everybody has different risk tolerances and stop losses, and just a different financial background. So we don't give really specific trade recommendations on a YouTube channel. So in saying that, let's go and get this started. Steve, how are you doing tonight?
Hey, I'm doing fine, Drew. When I started preparing for tonight, I didn't think I'd have much to talk about, but as it turns out, I did.
Yep. So I see you've got the U.S. dollar here. So what's going on with the U.S. dollar?
Yeah, I think a lot of the volatility that we saw in the marketplace this week has likely come from the fact that it appears that the dollar has made a major low. Would be a 3-year cycle low. And so it would be an intermediate cycle low. So we would be beginning a new intermediate cycle. And of course, there's no confirmation of that yet. It did close above the 10-day moving average. But there's no confirmation as of this moment, but I suspect strongly that the dollar has bottomed.
Gotcha. So what is that? Well, I guess you're probably going to get in the metals here in the next few slides. So we'll get to that in a second. All right, let's take a look at the S&P 500.
All right. So, yeah, I think this has also coincided with a intermediate cycle low in the stock market. We've had a strong sell-off this past month, and I believe that stocks have bottomed. I don't know that we're going to have a strong V-type rally or anything like that. And as steep as that decline was, it may chop around here for a little bit before taking off and going higher. But I suspect that the intermediate cycle low is in. If you could grab a position here, the risk is easy to manage because you would put a stop right below that swing low. And so if you were going to try getting into stocks again, this is probably as good a place as any to start with a small position.
Let me ask you, are you expecting kind of a dead cat bounce for the kind of do you think long term it's going to continue going down further and further with just kind of a dead cat bounce, or do you think it's going to do a full recovery?
Yeah, well, I suspect that it's going to be somewhat of a dead cat bounce. We might retest the highs. I don't know. I'm not expecting the stock market to be very strong this year. And it did fall below the 200-day moving average, but we're still quite a bit above the 200-week moving average. I didn't include that slide. So we still are in a situation where stocks are pretty overvalued, even after that strong sell-off.
I would tend to have to agree. I think personally, dead cat bounce and probably continue sell-off with the instability of the tariff situation as we go through this transition period in the next few years. So I'm not expecting a whole lot out of the stock market myself.
All right, the oil markets are getting me interested. Now we can see that the horizontal green line that you see on the chart is the 200-day moving average, and oil got pretty far below that, and it formed a double bottom. If you went back to last September, we reached those levels again. And I suspect, just like stocks, if you wanted to try taking a position in oil, this is probably as good a spot as any. And there's a lot of reasons to consider taking a position in oil and in energy in general. And I'm talking about heating oil and unleaded gasoline also. They all look pretty good to me right here. The next slide is a weekly chart, and you can see how the price on a weekly basis, oil's pretty far below that 200-week moving average. The stochastics and relative strength indicators have all bottomed. The stochastics are already turning higher. And so I expect I don't know if we're going to see $80 oil again. I think that's where the oil people are telling Trump they would like to see oil up around $80. And $80 is right around that 200-week moving average. So I think it's a real possibility that we could see a rally in oil perhaps as high as that level. There's other reasons, though, to be bullish. If you go to the next chart, this comes from Sentiment Trader, and you can see that we almost reached extreme bearish levels in the oil market, and that's what you need to have a strong rally, is extreme bearish sentiment, and that's the fuel for a strong rally in most any market, and should fuel a rally to where we would have a regression to the mean type of event, where maybe we get back up to that 200-week moving average, which is near $80. The next chart shows the seasonals, and April is the strongest month in the year for crude oil. And, March is halfway over. I suspect that oil has bottomed, and we're just in time to catch this seasonal trend.
I'd have to agree. I'd have to agree. Not to take it away from you, but we're coming into that good old seasonal driving season, and the narrative usually becomes pretty bullish for the driving season. I'm not expecting spectacular things because I think the economy has cooled off a bit, but it could help it along, in my opinion.
That's right. If the country is moving into a recession, maybe that move will get muted somewhat. But this chart shows what the large speculators, how they're positioned, and they're almost as short as they've ever. Well, they're not really short, but they are holding a very small number of long positions, and so there's plenty of room there for the large speculators to jump into the oil market and drive it up higher. This next chart is something similar that comes from Moore's research, and in that green shaded area, that's the going back 30 years on a 30-year, a 15-year, and a 5-year basis. Crude oil typically rallies the strongest during this time of year, between March 18th and April 15th. And so that all supports my hypothesis that the crude oil markets have bottomed.
Fantastic. So let's take a look at gold, one of my favorites that I'm watching closely.
Okay. If you go back and check our videos back into February, this 30-50 level has been a target of mine. And I think that gold could probably go higher, but this was where I thought we would first have some sort of major resistance. And we got right to that same level. So, probably putting on a lot of extra risk now doesn't make sense. When you're in strong bull markets, the tendency is that we want to be cautious when the markets are reaching extreme levels. And I've heard people talking about 3,200, 3,500, some extreme levels on gold. We haven't made that yet. And it could be that we're going to have to wait a little bit longer before we can get to those levels. So I'm not real excited about the precious metals right now.
Yeah, I'd have to tend to agree. I've been saying, like, these last few sessions, watch, the rug pull situation. It could still run to 3,100, 3,200, but it's had such a long stretch and a long run. At these levels, I am being somewhat cautious with my clients. We're still participating, still in it, still long, but at the same time, we've just been on such a big run, and we're coming into that sell in May and go away season, which it's not always that way, but often it can do a rug pull at some point in time. But again, it's hard to put my finger on it because with the whole Trump tariff situation, it's a really tough to make any type of predictions right now in this market. So
this next chart, I want to talk just a moment on copper. If you go back to our last video, I talked about this this level that you see, the 515 area where copper is almost making a double top. It's almost there. It's not quite there. Probably doesn't make sense to initiate long positions here either.
I have to agree. That's definitely been stretched out, and that volatility, I would say the risk really isn't there, in my opinion. Let's
All
take a
right.
look at orange juice.
I just threw this one in for funsies. I like looking at things. If something catches my eye, that's a little out of the ordinary, sometimes I'll take a bite. And so I bought some orange juice yesterday. Had a huge sell-off, and we're just entering a seasonal period. If you go to that next slide, where it's this, March tends to be the best month, the second best month of the year for orange juice. And given that it's bottomed here a little late, I just expect that this rally is probably going to begin a little later, but I think it ought to be good for, you can make a few dollars if you wanted to try an orange juice contract. And again, we're close enough to the swing low, you could put a stop below there to limit any losses there.
Gotcha. Well, that sounds great. Is that your last slide? That is. I did see the OJ that you put on, and see if it bounces from there. But let's go and take a look from my side of the fence. So let me go and swing over here. All right, so let's go ahead and take a look from my side of the fence. I'm just going to do a few markets today. It is Friday evening here. So here's the Dow Jones Industrial. We talked about that dead cat bounce, and we definitely got it, as you can see here, going back to March 13th and March 14th on that lows. I expect it to probably short-term go higher and then probably come off from that level. This is just based on the daily 14 and 45 moving averages. Probably going to come up in that 42, 812. And this is the June contract, by the way. Probably come up in I would say 42,401, 42,741, and then probably look to go and stair step down. But it's probably going to be pretty choppy, in my opinion, going through that. Now, silver. I've been actually the last, like I say, how I've been trading, but I've been trading a lot of silver lately. This is May silver. You can see right here, we came into a kind of a small buying area right here, and it is holding. Now, compared to gold being at all-time highs, silver is still a pretty decent play, in my opinion. But my fear factor, I will say, is if gold does take a rug pull situation and sells off significantly, silver can really sneak up on you. You think you're going to get comfortable and cozy, and next thing you know, it goes to where you don't expect it. I've been through many downturns. Can't stress enough risk management, particularly with silver. It usually goes where people least expect it. But I'm still somewhat bullish from this perspective, and today it did come into a buying area. But again, risk management is absolutely paramount at these higher levels. If we did get a sell-off in gold, and it would take it down from that level. Let's take a look at the treasury bonds. Now, I have been saying, hold on a second. I'll have to edit this out. There we go. There's not a lot of data on treasury. All right, so let's go and take a look at the treasury bonds. This is the June bonds. I've been kind of beating the drum of a transition all the way from this area, and lo and behold, we did get that transition, and we got higher bond prices. And I know Donald Trump wants lower interest rates, and lo and behold, here we go, marching forward with a lot higher bonds. So this one is still holding. I'm actually bullish on it still from this point in time. I do have a lot of clients trading the bonds as well, but I think we have turned the tide with the inflationary pressures and so on. So I am still thinking the bonds will slowly, and I'm talking slowly, grind higher, lowering that interest rate.
Yeah, I have a small position in bonds myself. I see
Do
what
you?
you're saying.
Yeah, I just, with the temperament right now with the president and the feds, I'm just thinking right now, and then also another thing too is, you see egg prices finally came off. You're seeing 260 gas, 275 gasoline coming off. So, I can see the inflationary pressures really have come off in a big way. And I do know there's going to be some tariff inflation, what we call cost push inflation. So that's going to be something I'm going to be keeping my eye on. It's not happening yet, but we're going to have some what we call cost push inflation that's going to affect just certain products. So it's going to be an interesting dynamic that we go into going forward. I think certain products here made in America will stay reasonable. And then, all the imports and so on, particularly steel products, you're going to see those rise in price in a significant way. Let's take a look at what the heck did I just do? What are your thoughts on soybeans? I'll cut this up too.
Yeah, I've got no idea. It's such a messy chart. I do know that between mid-March and mid April, that prices have rallied in like 12 or 13 of the last 15 years.
Yep.
So the big thing on soybeans to watch out for is on March 31st is the large USDA report, the planting intentions report. And that that report could really swing the corn and bean markets considerably.
So what day was that again? What day is that?
It's March 31st.
March 31st. All right. By the way, Steve is our grains specialist. So he knows, he eats and breathes the grains. That's why I turned to him. So what are your thoughts on soybeans? So there you go.
Yeah,
So,
I don't have a strong opinion on grains right now.
okay. Well, sounds good. Well, that is our weekly update. If you have any specific questions for Steve or I, we're always here to help you out. Between the both of us, we've got over 40 years in the business, so we've about seen it all. So again, reach out to us. Do you have anything else to say, Steve?
No, I've got my UK shirt on tonight. So
Oh, nice.
UK's already tipped off, I think, while we're recording this. So I'm going to run down and watch the game and go Big Blue.
All right. Well, go watch the game, and you guys, everybody else, have a great day and a great trading week next week, and we'll see you next week. Take care. Bye.